Well, first markets went up, and they went up to triple digits. Now they are down in negative territory. But again, who knows? This market's been all over the place since we had the announcement of the Fed's cut. They cut both the Fed's fund rate and the discount rate a full 0.5 percentage point, even though some people were betting on a quarter.
So what happened? We were at more than 100 points here. Like 120 or something. Let's bring in our panel once again. David Darst of Morgan Stanley.
Liz, I think it's profit-taking. I think the market has rallied off its lows. I think people are looking for these other key variables. Now we turn to jobs. Now, based on the first quarter GDP numbers, which came in 0.6%, the street was looking for 1%. There's some things in there. The ADP payroll numbers today indicate to us that the job growth might be 100,000 on Friday. Our earlier estimate was 75,000. As you know, last month was 18,000. This is the key thing that we think will determine the severity and duration of the recession.
So, Alex, if folks still have jobs, presumably they can still go out and buy things, and consumer spending won't be hurt too much. Perhaps this recession may not happen.
Oh. Well, at least you'll have $300 to go out and buy an Xbox or something. But let me just remind you a little something, David. A week ago, I was on with a bunch of folks who were absolutely dour about the prospects for the market. It was a day that Citibank had come up with terrible earnings, and I said, this is your opportunity to buy the banks at a discount. The banks are now up anywhere in the 10% range, and today's cut is going to make a difference because it is going to steepen the yield curve, which is going to put money in the bank's pockets.
I don't know.
And is going to keep those banks from getting in trouble.
I'd love to believe that, but if the bond insurers lose their ratings and get in a lot of trouble, you may look at $70 billion more in new write-downs for some of these banks. And Peter, can't imagine that can be healthy for the banks.
No, don't buy the banks. But you know what, Liz? If you're a saver, if you got money in the bank, you got CDs, you got government bonds, you better run for cover, and you better run quick. Ben Bernanke is gunning for you. You better pick up the phone and buy as much gold as you can afford. It's going a lot higher. I'm looking at the chart of oil right now. It's going to blow through $100 a barrel, and it's not going to stop.
This is what
prices are going through the roof.
This is what David Darst brought today. I mean, it's a shocking thing. He says the dollar worth about 25 cents
to the foreigners.
It's actually worth a nickel, and it's going to be a penny soon.
And by the way, Alex,
we're going to have to replace pennies with dollar bills.
Hey guys, let me just pine in on one thing. Sure. I just came back. I'm out in Colorado. I just came back from Vail. Vail is doing a land office business selling real estate and lift tickets to all those
to the foreigners.
Yes, they are.
Yes, that's a disaster. Where they're buying our country out from under us because we're bankrupting ourselves.
That's
precisely the point. You got the 25 cents. The flip side of that whole weak dollar story is this influx of enormous amounts of money coming in here.
Building plants, Michael.
Building plants, investment.
They're renting homes in the Hamptons for $1 million. It's play money.
Hold on, please.
Mike, go ahead.
So that's the flip side of the story. Look, fluctuating exchange rates act like a stabilizing mechanism. In New York City here last year, $47 billion, a record amount of tourism coming in here. Exports, by the way, the fourth quarter GDP does not include December export numbers, which we won't know until February. It could be very easily a situation
Let's
we get a higher
not get too
number.
wonky. You're on the bottom line is what Peter Schiff sees is the Weimar Republic, Germany, where you bring in these wheelbarrows full of money, that this 25 cents is actually going to go down to a penny. Do you really think it's that bad?
Yoram?
No, I don't think it's that bad, but I think it's bad. It doesn't have to get that bad to be awful. Let me use that emergency room metaphor. The patient's there lying on the kuni, he's dying, and we're injecting him with water and a little bit of poison. When we have to remember that it's a doctor that caused the disease to begin with. It's loose monetary policy that caused this problem. It's overregulation of financial markets that caused this problem. Mike, quiet for a minute. Quiet. It's the doctor who caused the problem, and we're inflicting more of the same poison on this economy.
Short term, everything might look great in a few days, but long term,
may I add one thing very quickly? Don't forget, this is a classic. You've got a 9-inning ball game. The first 3 innings, our enemies bash the United States. The second 3 innings, our friends bash us. And the third 3 innings, classic, we bash ourselves. And that's where we are now. New York Times Sunday Magazine shows the United States shrunken down to a tiny shadow of its former self.
Yeah,
no way.
That's a great contrarian indicator, by the way.
I think you all need a ski vacation.
Yeah, you're lucky. You
we
got
can't
lodging.
afford one.
Alex,
the
at least you
Europeans
got
are honest.
lodging
There's
in
no
Vail.
room.
You know, I mean, Alex makes a great point as we come up on the closing bell that you can't find lodging in Vail because wealthy Mexicans, wealthy South Americans, and Europeans are coming here. I'm not sure that's the worst thing in the world.
It's not. It's the way it's supposed to happen.
But we are at the end of a game, at least one day's game, and it all adds up to negative figures today.